Welcome to the Millionaire Journey Podcast. The goal of this podcast is to guide and empower you on your journey towards financial independence. Here's your host, Glenn Yaney.
Today, my guest is Joey Mure with Wealth Without Wall Street. Welcome, Joey.
Man, so glad to be with you, Glenn. This is going to be awesome.
I am super happy and excited to have you. I've been looking forward to this call. And if you could, for our listeners, just tell us a little bit about yourself.
Well, Glenn, the reason I'm excited to be here is because we're both about freedom. And I'm an addict, man. Like anything that is going to provide freedom in my life, I want to learn it, I want to own it, and I want to teach other people how to get there. It starts with spiritual freedom in my mind. Like if you don't have a relationship with Christ, you're really leaving so much freedom on the table. In fact, the most ultimate freedom. But then from there, it's about financial freedom. It's about creating a lifestyle that doesn't require you to have your calendar filled with everybody else's important things. It's about your important things and your important people in your life. I'm a father to 5 daughters. I've been married for almost 22 years, happily, I would say. I've been on a journey for the last 20 years of learning different ways that the financial system is broken. And that's the name of our podcast, Wealth Without Wall Street. We're going against the grain because at the end of the day, you can't do what everybody else is doing and accept or expect a different outcome. And so you got to go against the grain. And so in this case, we're all about creating passive income that exceeds your monthly expenses. And we've even created the system to get you there. We call it the passive income operating system. And anybody who is serious about it, like creating the vision of their life that we're talking about today, can implement the system and see results. So I'm really excited to unpack that with you today or anywhere you want to go.
So the first question, father of 2 daughters, what has having 5 daughters taught you?
Humility, patience, the fact that I am not very inclined emotionally. I have to grow every day in learning how to process emotions and share emotions and all the things. But man, there's nothing like the love of a daughter to her father and vice versa. I mean, it's life-giving and it's also heart-wrenching at times. So man, so many lessons. And if you want to make the podcast about that, let's dive in. I'm happy to do it. But how old are yours?
So I have a 3-year-old and a 5-year-old.
Oh, those are the best ages because they are just all about dad. And be honest, Glenn, this is when one of my daughters, my 4th, was 3 years old. I had an epiphany that led to where we're at today. You mind me sharing that story?
Let's do it.
So if you have a 3-year-old, you're driving with her solo, is there any lack of words being shared in that car?
I would say no.
All the words.
Yes.
I'm driving my daughter to her, it was like a preschool at the time. And this was a rare day because I was in the mortgage business and I was working 70 hours a week, constantly on my phone, never truly mentally present because I was always wondering, I got to answer the next call from a realtor or from a borrower. And so this was one of those rare days where I took off in the morning just to take her to school because my wife had a conflict. So we're driving and just picture this. She's in the back seat. She's all bundled up, got her jacket on. She's got the little harness all in there, got her hair in a bow. And she's just talking. And then she asked me this very simple question. She's like, "Dad, you gonna pick me up from school today?" And I was like, no, it's almost like, why would you ask me that? You know that I've never been there in the afternoon to pick you up.
Yeah.
And I'm like, "No, sweetheart, your mom's gonna pick you up." And she says, "Why are you not gonna pick me up?" I was like, "Well, because I have to work." She said, "Why you have to work?" I said, "Well, I have to pay for this car. I have to pay for our house. I have to pay for the food that we eat." She says, "Well, we already have a house. We already have a car. We already have groceries." And I don't know about you, Glenn, but like at that moment, it was like a lightning bolt. It's like, what just happened? Like my 3-year-old wants nothing more than me. Like at that moment, that's all she wants is time with dad. Whether it's like playing Barbies or, playing barbershop and she's over there, brushing my hair or whatever. Like she just wants time with dad. And I answered her and said, I have to go to work. And the reason that was true is because I was the only asset at work. My money was not working for me. My money was not creating opportunity. Only I was. And I was just like really gut wrench. I was like, I'm never going to answer her like that again. Like I know the answer is I have to create passive income. I'm about to get serious about it. And I went and talked to my friend, now my business partner, Russ Morgan, and I was like, dude, we got to create passive income. And that really set us on the journey to now fast forward. It was really just a few years after that, we had created over $50,000 a month in passive income. And so I credit that conversation with her. Your daughters are so intuitive and challenging. I don't know about you, that's just one example, but made a huge difference in my life.
Yeah, the biggest part I struggle with is being present. When you're with them, feeling stressed out over work. Whether you're financially independent, there's still stresses.
Yeah.
And I find myself like not there. Like I'm just like I just need to plow through this time with my family to get back to work is what I struggle with. And that's my today biggest struggle, trying to be around my family and present and being not counting the minutes to get back to doing what I was doing. That's been a big one for me. How do you get around that?
Oh man. Well, like we're all drivers,
Yeah.
we're entrepreneurs, we're business owners. Like there's the buck stops with us. And so there's no lack of pressure from that and no lack of and be honest, that's why we're built different. There's some people that just can't handle that. But I think, for me, it's just setting boundaries on the time, for number one, as a business owner, entrepreneur, I get to set my schedule. And so I've made it a point, like I'm going to have breakfast with my kids every morning. I'm going to have dinner with them every afternoon or evening. And that just means I have to shut off the phone. Like the phone has to be put away when I'm not at work. And so it's just kind of a boundary that I've set. And then the second thing is, it really does require me to trust the Lord. If I say that I trust the Lord, it's one thing. But in order for me to to put that phone away and to then focus on who I'm in front of, really requires me to say, this is the amount of time God wanted me to put towards the effort of, doing this job or this work. And then I'm going to trust him ultimately for the outcome. And so I don't know if that's super practical, but those are the things that I think that, have allowed me to just order my days around when they're at school. And we actually homeschool. So I see them in the hallway all the time and I high five them and, help them with math tutoring and all this kind of stuff. But really just telling yourself, I'm going to set those boundaries because work will always fill the void if you don't set the boundary.
Yeah. And I can literally, I'd feel like my mind is somewhere else all the time. And I was at dinner. We went out to eat last night and I was just like chomping at the bit. Like I could not be present. And that was it's been a most recent issue for me as well. So
it's not easy for sure, but it can be done.
Cool. So let's talk about some, I guess, ways that you have, your foundation, as in your structure, and really how you built out your cash flow today.
Yeah. Well, I'll tell you, we kind of talked about this pre-show, but I got my start in the mortgage business for 11 years. And during that time, I learned a lot of the traditional ways people think about money. The bank is always trying to get you to give up more of your money today because it's valuable to them today. So they encourage you and incentivize you with a 15-year mortgage as a lower rate than a 30-year mortgage. Most people think, oh, well, that's helping me. It's actually helping the bank because
Yep.
they get more of your cash today as it's the most valuable time because of inflation, paying off debt. Everybody was focused so much on paying off debt. And ultimately, I learned a different formula. Paying off debt is okay if it's done in light of the only formula to financial freedom: passive income greater than monthly expenses. Passive income greater than monthly expenses. If you know you have $10,000 a month in monthly expenses for your mortgage, your credit cards, your auto loans, whatever the case may be, your cost of living or expense of living, then you need $10,000 a month in passive income through whatever means possible. And if you can keep score that way, then you can say, hey, you know what? I've got 50,000 in my bank account or in my infinite banking account. That's what we use as our base model, our passive income operating system. Then I can make the call. I can say, well, I could put 50,000 into this deal with Glenn, and this mobile home park is kicking off, I don't know, $500 a month, whatever the case is. I'm not
Yep. Yeah.
giving
Yeah.
I'm not giving people a specific of your deal, but let's just say that those are the numbers. So I could get $500 a month passive on this deal, or I could go pay off something that's 50,000 in my monthly expenses. And let's say that was a car note, and that car note was $350 a month. Well, again, these are just hypotheticals. You have to do your own math on your own scenario. But if I'm keeping up with that math, it would cost me more to pay off the car and save $350 a month than it would to gain $500 a month in this mobile home park, let's say. And now I can be objective, because people make debt and investing very emotional. But if I can just keep score that way, I know I'm moving the ball forward because I just increase the percentage to my end goal of financial freedom by investing versus paying off the debt. Most people are like, well, what was the interest rate on the debt? I don't care.
Yep. Exactly.
The interest rate doesn't matter. It's the cash flow, because that's the only thing. When you pull up your phone, I have my phone right here. When I pull up the phone and I look at my calendar, the only time that calendar is free and I can put the things I want to put on that calendar is when I know my monthly expenses are already paid by my investments, by my passive income. Until then, I'm now owned by my business or someone else's business that I work for. If you're a W-2 employee, let's say, I have to put what's important to that person on my calendar. And that's what we're really after, right? We're really after the freedom to say, this is what I want to be doing with whom I want to be doing it at this time. And that's where my whole life really changed when I got introduced to the infinite banking concept. And I started looking at, I need to be the banker in my life. I need to be the one who is taking control and not abdicating to Wall Street through 401ks, IRAs, 529 plans, all the alphabet soup that they're trying to tell me is good for me. It is only about you being the investor and you taking control. And that's what really kind of set me on the course that I'm on today.
So being the banker yourself, how do you, we talked about a little bit before about, buying cows. Like what kind of investments are you looking for now that you're the banker? Like what kind of deals do you really prioritize from experience?
I want to answer that, but I have two things to say before we get there.
Sure.
Is that okay?
Yeah.
Because I think I'm telling you, this is the foundational things to think about. Most people want to jump straight to the investment.
Yeah.
Because that's how they've been trained. Okay? You start at a new job, you get the employee benefits package, and they say, hey, by the way, here's your 401k. Your election has already been picked for you, or you can change it. I mean, it's that ridiculous. Like they literally assume you're going to do it, and they've even almost picked it for you. So I say that to say, most people have never thought about being the investor or the banker in their own life. And so what do? They put money into places that they don't understand, they don't control, and they have no access to. Those are the 3 top things that make you a terrible investor. I mean, think about that. I put money into something I can't get access to. That sounds like jail. It sounds like the complete opposite of freedom. And then on top of that, it's in things that are too complex and there's too many variables to understand. Okay, so like right now, as you're listening to Glenn and I have this conversation, you may have put money into Forward K, and I would just ask you, what you may know the name of the mutual fund that is behind it, but what companies are in the mutual fund? Even more so, who are the CEOs of the companies in that mutual fund? And by the way, what was their earnings last quarter? And what's next on the horizon for their business? Do you agree with the direction that they're taking? Do you have any idea what the outcome could be of how they're making decisions with your money? This is ludicrous that we do this blindly because we've been told it's to our benefit we have all the time in the world. Put money forward. Okay, you got time. You got time to take your lumps whenever the market drops by 20% in 2 days. So it'll bounce back and you got dollar cost averaging. Like, this is nonsense. But Wall Street is one of the greatest marketers of all time. They've told you that you're not smart enough, that this is way too complex, and that you need to put money with them and just hope for the best, that by the time you're 60 or 65 or 70, you'll have this mountain of cash that you can just ride off into the sunset and just live off of whatever is left. You start taking dollars off the top of that mountain. And it is a lie. I'm telling you, because number one, they have no responsibility for what happens. Think about that. That's like, I'm going to drop my kids off with a babysitter and they're literally going to be like, well, I don't know. They ran wild. They ran out in the street, got hit by a car. I can't be held responsible. Like, literally, your dollars can go any which way. They could gain, they could lose. And the person that's managing that money, they say money management is not to be held liable or responsible for whatever the outcome is. But yet they're going to make money off of your money today, not 30 years from now, like they're telling you that you're going to get. Like, this is a backward scenario. Man, I'm getting all passionate here. Like, I'm telling you, like, all this stuff. So anyways, so you'd say, what do you invest in? So the first thing is get access to your money. Put money into your control. That's where we got the infinite banking concept answer that for me, because it begged me to become an investor. As soon as you start putting money into your control, all of a sudden something clicks and the creativity starts to happen. It says, hey, Joey, you got 20,000, you got 50,000, you have 200,000 sitting in this system of insurance policies that are created for cash value. What are we going to go do with it? And if you don't know, you have to all of a sudden figure it out. You have to go become an investor. You have to go try some things. You have to listen to guys like Glenn. You have to go on podcasts like Wealth Without Wall Street. You have to be educated. Maybe you take courses, maybe you get training, but you have to be the investor. Nobody else is going to do it for you. So that's number one, get access to cash and become an investor. Number two, what sort of investor are you? And most people are like, what do you mean? I mean, there's investments, you have money, you put them there, whatever. Glenn says mobile home parks are great. Joey says, hey, he puts money into land flipping, or short-term rentals or private lending. Well, guess what? You know your investor DNA? Do you know what your personality profile matches up with the most? Like, are you a high driver that just has to be involved and has to see high returns and know what's going on at all times? Well, then syndications may not be great for you because they're boring. You just put money in and you have an operator and they pay you and it just is what it is. But maybe you're a high compliant person, like a really detail-oriented person. Well, you're going to want to invest in things that you can analyze and you can get down to the nitty-gritty details and you can do the internal rate of return and the cash on cash and you want to be able to know exactly what's going on at all times. Well, you may want to invest in something totally different. because it aligns with you. So I'm not saying that you should know this immediately today. This may be the first time you heard it, but don't just assume because Glenn is having so much success in mobile home parks or John is investing in short-term rentals that that's what you should do. You need to do the things that line up with who you are. And we created a profile just to help people with that. And then the last thing is then what do I invest in? So I had to give a little bit of background and I got a little passionate there. So I'm sorry if I lost some people,
Yeah.
going off the rails there, but that's what I was thinking.
Hey guys, if you want to learn more about our deals we're investing in, go to our website and sign up for our free ebook, 10 Reasons Mobile Home Parks Outperform Other Real Estate Investments. We won't spam you. We'll just keep you updated on the podcast and the deals we're working on. Now, back to the show. A few thoughts as you were talking was that one thing that kind of made me change my way of, I guess, placement of money is really what it turned into was first for my steps was I bought, I drank the Kool-Aid, put it in a 401k, max it out, do the HSAs, max those out, and put it into the S&P. And then this is the part that I did this for 3 or 4 years straight, just as much as I could, just stuffed them till they're full. And then I had the ultimate goal of financial independence through buying real estate is what I always had that. It was even when I was buying, like putting money in my 401k. And then I realized that I had too many, like I was a shotgun approach is really what it was. It's just, I'm putting it everywhere and literally have not enough money to do anything with it. And so that's the one thing. And then the other thought was with the S&P 500, they say put it into an index fund. It's super low fees, all the stuff that goes into it, which really is not talking about the fees that the actual company charges to manage your money, for the investors. But what I would say to that is that in 2005, 6 and everything, everybody was saying the real estate market always goes up. And I think that everybody's always said the S&P 500 has always gone up. And I'm like, well, it's only like an index that's been measured for a short period of time compared to all investments, like for the past maybe 80, 90 years, so it's like we're in one cycle. It could be one cycle of this. And what if we're on the bad side of the cycle to have a downtrend of a market? Or not to say we are Japan, but if you're investing in Japan stock market, since the 80s, it's been like down the whole time. Like it's like up and down, up and down, up and down, down trend. So I thought I don't want to end up like that. And so how do I avoid that? And I actually was working at a really good company, real estate company, and I actually looked at, I'm like, what is my company actually doing? And I think everyone has a company they work for, unless they're for the government. But it's like, what is that company doing to become successful? And they're using their dollars to invest in cash flowing assets, whether it's through hiring people, through buying real estate or more locations and stuff like that. So that's when my mind changed to where I was like, maybe I should be getting more access to my dollars. And it started with cash, just put it as cash. And I knew about the IBC process, but it was never it was always like, I don't want to lose money is what it turned into, like the first initial year paying for premium. But as I've gotten older and I believe wiser, I've learned that it's like every investment is an investment. Like you have to invest into this thing and there is a cost to start, And I think with the IBC, the structure and all that, it's like the first year is just building out the structure of the foundation. And then after that, you've kind of have like, whatever, this policy, and the one thing I'll tell you, because we've talked about IBC a lot, I don't want to go too much into what IBC is because there's plenty of places to find out, but it's infinite banking concept. But what I would say that the IBC way of thinking is it actually puts a value on your dollar now. No longer is it zero. It's like 4, 5, 6, maybe percent of growth. So now it's like, if I take this money and invest it, I have to make sure that I'm going to beat this this interest rate, and it's a
The
guaranteed
cost of capital. Yeah.
cost of capital. And for me, it also makes me disciplined to buy things to uh, make sure that this capital is going to be returned back to me. It's like there's a value of like, okay, well, if I don't like, first it needs to pay me, to pay back this loan that I'm taking, but also I have to be able to, make sure I replace it. And
Right.
yeah, I love the whole thing, and I'm excited to have you on for that reason. So
Well, you made a great point. And for somebody that's maybe hearing you for the first time and saying, okay, this infinite banking, it's whole life insurance. I don't know about that. I've heard that that's expensive. I've heard that it's a bad place to put money. I mean, Dave Ramsey hates it, blah, blah, blah. Here's the reality. You said it super well. You said there's now a cost of capital. Well, guess what? There's always been a cost of capital. Like when you take $100,000 out of your checking account and you put it into any investment or any liability for that matter, you think, well, there's no cost, right? It was just cash. I just took it out of my bank account. I did whatever I was going to do with it. There's no cost because there's nobody sending you an interest statement every quarter, every month, every year. Whereas when I borrow against my life insurance policy, they charge me interest for the use of that money. And I see it. I have a statement every year that says that there's interest on this outstanding loan. But the reality is, opportunity cost is what is costing you on that cash, whether you have a policy or not, because now you know that that money could have been earning whatever that policy is now earning. Or, I mean, heck, you could say even a CD. If I had money in a CD and was earning 4% right now, I now have, if I took it out of that CD, I would no longer receive the 4%. The beautiful thing about the infinite banking concept and what we've now discovered in calling it the passive income operating system is that every one of those dollars has a cost. And I want to use it wisely, to your point, to the point where I will not, um, steal the peas, as Nelson Nash talked about, and not pay it back, not make more than what it cost me to do. And I can start making really wise decisions in terms of investments as a process. So anyways, there's a whole lot more detail. We actually have a free ebook that I'm happy to link up. We created a page just for your show, but it's the Passive Income Operating System ebook. It shows a whole breakdown of how your cash flows into this, how you access it, how you then use it to build passive income, and then replenish it and grow it. It's just a perpetual system to get your active income and turn it into passive income, because that's the ultimate future of becoming financially free.
So I think we could go full circle with this conversation. And this is something it's been on my mind. And how do you start to, how do you show your kids this whole, how do you start working that into your life with them, showing them, because it turns into, a big responsibility, the
Really does.
it turns into where through this, it'll be more life insurance than you've ever imagined that you would ever have. And almost, it's just like I look at it as like credit card reward points to the extreme, So it's like, how did it even get to this number? And you do this for 10 to 15 years, and it's pretty impressive. But it's like, am I going to curse my family with this money? Is really what I think to myself. Not giving them too
Yeah.
much to where they don't have to work, stuff like that.
Yeah. So two thoughts that I have on this. Number one, I'm actually in the current process of building a system of trusts that will allow the end result of this to be that I've given certain requirements on the money that my family can access and repay, like a big banking system, similar to the way the Rockefellers operate. And it's not something I've fully baked yet, but I'm in the process of saying, okay, what's our family values? What do we stand for? What's the element of giving that is going to be a part of, like, a requirement as to our family being able to access this natural bank that we've created, that they have to also be generous, and there's an element of how you have to be involved in that. aspect of it. But then what are the parameters on which we would lend to the family? And what kind of repayment is required? What are the things we want to support? What are the things we don't want to support? Because to your point, you have a lot of money. The last thing I want is for it to dissipate, like be sent out to each child, and then them just not have the responsibility, and then boom, they've just spent it all like the Vanderbilts did. I'd rather it be a pool of capital that the family can use responsibly. And when I say use, I mean that. They borrow it, they pay it back, they borrow it, they pay it back, and it perpetuates itself. So there's a lot more detail we can go into, but that's where I'm thinking and where I'm currently at right now. And then the second thing is I think, you and I are at a position that we weren't whenever we were 18, right? We didn't have the knowledge that we have now, or the understanding of how the world works and how passive income works, and how to be wise investors. So the thing that really burdens me is I want to be responsible with that knowledge and say, hey, girls, this is how you do this. This is how you steward the money well. And we've actually, because we homeschool, we spend a lot of time together. And I've taught my older two, they're 19 and 17, different ways in which we steward our money, what their investor DNA is, how their policies work. They each have their own individual policy that I own and I control, but they have knowledge of it, and they will eventually, inherit that, right? So I want them to understand how it works. And then lastly, what is their passive income kind of track that they're on? My oldest actually started a land flipping business because we took her to different conferences. She was able to learn it. She was able to implement it. And now she's 19 and actually able to build, several $1,000s a month in passive income just from that one aspect. My 17-year-old, she's gotten involved in content websites because that's more aligned with her investor DNA. And so she's helping build blogs and affiliate links and things like that she's, creating hundreds of dollars a month right now at 17. And she's also been a part of a vending business that we started. And she's been part of helping us run that and get her hands around that, where she could eventually expand into that as a young adult. So I think it's twofold. You have to create a system that the family can know and understand how it works, and put all the legal and mechanical things behind it. But then the education is the most important thing. If you just pass on money, it's guaranteed to be just dissipated. But if you pass on money with parameters that have to go with education, now you've got something that has the ability to sustain itself and well beyond your children's children, is kind of what the Bible talks about from an inheritance standpoint. So I'm really passionate about that. We can't control what our kids are going to end up doing, but I want to be faithful to share to the extent that I think it will support them and their future families. So that's kind of how I think about it.
There's a few thoughts the first one is like with what you just the example that you just gave was, your daughter doing land flipping, and it kind of turns into where it's like you make it to where it's almost like they don't even need the money that's in your legacy. So what actually happens at that point? I mean, like, it's like, how do you, like, so we're trying to teach them to be good stewards of the money that's given to them, or the money that they earn. But through doing that, you kind of get I'm sure we've all had those experiences where, like, we got in too far in with debt or some type of scenario where we're like, I'm not going to do that again. And it kind of creates this sense of, fear to not go back to that. And with giving the legacy, like, how do you, like, it's almost like if they knew that they were getting it, they might not try as hard, is the big question that I have for myself.
Well, so you're saying, I want to make sure I understand correctly. You're thinking they're going to inherit this money, so they may not really pursue a career or a a business as hardcore as they probably should have because they know that there's something coming. Is that what you're
Yeah.
saying?
Yep.
So the way I think about it may be a little bit different, and this is largely based off of the book Entrusted by Andrew Howell. If you ever want to listen to that or read it, he's a super amazing guy. Just really helps you think about this stuff. But the thought process is not that they're going to inherit a bunch of money. What they're going to do is they're going to inherit the access to a family banking system. And what that requires is responsibility. It requires almost like a board approved lending process to where it's not just like, hey, I'm one of the children of this trust, so I get X amount of money. That's not how it works. It's, hey, the trust supports you in education. The trust supports you in buying a primary residence. The trust supports you in starting a business. And those parameters are now laid out that you have people who are involved in that process that say, check, yeah, this request passes the test, but it also requires them now to then repay it. So it's not just free money
Yeah.
that just is going to, essentially spoil the kid, to your point. It's furthering, hopefully, the education you gave them leading up to that. And now they see it as their kind of almost fiduciary responsibility to manage this larger opportunity. And it's for the good of others, not just for themselves. That's the other part I think that is critical.
Awesome. So is there anything else that you'd like to mention or anything?
Here's what I'll say is, Glenn, people that are listening to you already have an advantage. They're already thinking something's not quite right, and I need to break out. I need to do something that I've never done before to get different results. And here's the thing: the only other thing that I know is that there's some people that are held up by their own limiting beliefs that they can't really do this, that this is for somebody else, and that they have a limitation because they're not smart enough. They've never gotten a background in finance, or they've never, done something like what you've done with real estate. And so they're like, oh man, this may not be for me. Here's the final analogy that I'll give to you is you are never not the investor. You're always the investor with your money. The question is, are you going to abdicate that responsibility to someone else, or are you going to actually take control of it yourself? And I will tell you, when you take this on and you say, I'm going to be the one responsible, I'm going to be the one that takes this seriously for my family because financial freedom is too important. Like, my kids don't want to spend time with me when they're 40 years old and I'm retired. They want to spend time with me now, when they're 5, when they're 3, when they're 10. I need the freedom of time today. The lie is retirement. Do not buy into the lie that it's too hard, I'm just going to put it off, and I'm just going to work, and I'm going to have all the excuses to just say, eventually one day. The truth is, you can make a massive impact on getting to financial freedom today, but you got to get there with help. You got to be in the right communities. Got to fill your head with the right information. So being on this podcast, hats off to you. And then you got to become the investor. You have to have the system, and you have to become the investor. And whether it's working with somebody like Wealth Without Wall Street, we have these systems in place. We have these places where you can be educated with our passive income lab and our mastermind and so on. If it's not us, go somewhere. But don't sit back and wish that you had the freedom that you could have. You got to take action. And it's an imperfect action type of process. There is nobody that just overnight has this success and they're just like, oh man, I'm the man. You learn by doing, and be okay if you make some mistakes along the way, because you'll get there faster. And so anyway, I just want to encourage you to take action because it's so worth it.
Yeah, the one thing I would compliment you also is if you were to make the decision to do, to look into IBC, Joey's got like an abundance or infinite amount of information, but also the one thing that I like is the community, because it's like there's no way I'm going to find somebody in my best friends, my closest business partners. I can't talk to them about IBC. Like, it's just like, there's not going to happen. They've already got their way of doing something. I'm not trying to convert them is like trying to talk about politics with somebody. But I would say that once you see it, you can't unsee it, is my opinion.
Yep.
And when you have a community, it's like you can kind of see exactly how people are utilizing the IBC in their life, and also find more people in abundance. And I really believe that's what the whole infinite banking concept promotes, is abundance. Nobody's trying to cut anybody down. It's like we want everybody to do better. Like I have no doubts. Yeah,
for sure. And I'll leave you with one, just really as the antithesis to that.
Yeah,
Wall Street and retirement are based off of scarcity.
Yeah.
Okay, that's a bold statement, but I'll just say it. Like, today, you're being encouraged to live off of less so that you can put as much into retirement, quote unquote, as possible. And so you cut back, you live below your means, which is great. Those things are good, but you almost kind of put up with a lot of things because you're just like, I'm just going to try to put as much as I can away for this future thing that may or may not ever happen, by the way. And then the second part of that equation is in retirement. Okay, think about it. I finally climbed the mountain. I've gotten here. I've gotten to retirement. And what happens? What's the first question mark that happens?
Now what?
I hope I've saved enough.
Yeah.
Right? So every headline that comes out, and they say inflation, they say tariffs, they say economic uncertainty, they have all these things. Does that encourage you to take more or less from that account that you worked so hard, 40 plus years, putting money into? And you're gonna try to live off the least as possible.
Exactly.
So this vision of, oh man, eventually now I can start going on vacation more. I can travel the world. You're not going to do that because you're scared. In fact, I know this to be true because I was at the beach with my family, and this lady walks up. She said she saw Wealth Without Wall Street on my shirt. And she was like, "What's that?" And I started telling her about it. And she said, "Well, my husband and I, we were just retired this past year. And I just hope it was enough." That was her words, like unprompted. She just said that. And I'm like, that is very telling, because she's at the pinnacle. And her only thought is, I hope it's enough. That is not the answer. And I hope she's fine. But for you could take action today and make sure it's more certain than it's a hope, and you can live more abundantly, not scarce. So anyways, I know I've talked way too long, but it just, when you said that, I was like, okay, I got to just
lay up,
come off the top ropes here.
Awesome. Well, Joey, I really appreciate you coming on. If you could just tell us where the listeners can find you.
Absolutely. Well, all the things that we mentioned today, we have a specific page. If you go to wealthwithoutwallstreet.com/The Millionaire Journey. So wealthwithoutwallstreet.com/The Millionaire Journey. Our contact info, ways to engage with our team, our community that Glenn mentioned, all that is listed there. And we love to hear that you found us by this conversation with Glenn. So really appreciate that.
Awesome. Thank you so much for coming on.
Yeah, my pleasure.
Thank you for listening to the Millionaire Journey podcast. Please rate, like, subscribe, leave a comment, and share with somebody you think would enjoy listening.